Your brand new iPhone deserves the best protection, and the iLune 3-Pack Screen Protector plus 3-Pack Camera Lens Protector has you covered. Don't take risks with your iPhone. Click the link in the video description to shop now on Amazon.
Welcome to Bitcoin Bulletin, where we're diving into the latest news and trends that shape the world of cryptocurrency. Today, we're exploring a fascinating story about how Bitcoiners called it first, and now, U.S. economic data is catching up. In the shadow of institutional speeches, another voice has emerged, Anthony Pompliano, a leading figure in the crypto sphere. He's not just criticizing the economic data, he's predicting its downfall. Pompliano argues that the Bitcoiners were the first to see that the economic data was false. He's pointing out the underestimated inflation, revised employment figures, and GDP growth rates that he believes are largely overstated. But why should we trust Pompliano? Well, his words aren't just empty assertions, they're backed by some surprising admissions from top officials. Take U.S. Treasury Secretary Scott Bessent, who recently said, "I do not trust the data." That's right, a high-ranking government official is now questioning the accuracy of our economic figures. This isn't an isolated incident. A 2024 study by the American Statistical Association warns that our public statistics are vital but also vulnerable to neglect until they break down. With budget cuts, collapsing survey response rates, and even political interference, the statistical foundations are crumbling. So what does this mean for Bitcoin? Well, Bitcoiners don't just criticize, they act. They're finding ways to financially capture the rise of Bitcoin if their predictions come true. And it looks like that bet might be paying off. When traditional markets stumbled on April 4th, the price of Bitcoin surged above $84,000. That's a rare countercyclical move that analysts are praising as a sign of increasing independence from stock exchanges. For Pompliano, this resilience proves that Bitcoin is not just a speculative asset. It's a critical tool and an alternative economic thermometer disconnected from institutional channels. As he puts it, the dollar falls and Bitcoin rises. It's as simple as that. Now the Federal Reserve seems paralyzed, hiding behind official data. But what if we can't trust those figures? Pompliano reminds us of the Trufflation Index, which shows an inflation rate of 1.7%, far below the government's claimed 2.8%. That's a heavy consequence for households, businesses, and even cryptocurrencies. If we can't trust our economic data, how can we make informed decisions? These are questions that Pompliano is asking, and so is a report called The Nation's Data at Risk. This study highlights the danger of a gradual collapse of the public statistical system, the data that drives interest rates, social assistance, and markets. So what's next for Bitcoin? Some analysts believe we might be moving towards a new monetary standard, one where hard currencies, like gold or even Bitcoin, gain legitimacy. Pompliano puts it bluntly. A public financial conversation has become an intellectual deadlock where people regurgitate opinions based on faulty data. That's not the case with Bitcoiners. They're no longer blindly trusting figures. They're relying on their experience, network, and blockchain. The future will tell if their reading of the world was correct, but one thing is certain, they now have the ear of a public in search of bearings. Thanks for joining us on this episode of Bitcoin Bulletin. Stay tuned for more insights into the world of cryptocurrency and stay ahead of the curve.